Hello and welcome everyone to the week ahead commodity report for the 24th to the 28th of December 2018, presented by myself, Phil Carr, at the Gold and Silver Club, and we will of course be reviewing gold and oil prices for the week ahead. So first of all, just a quick rundown of what we've seen here really over the last few days. So of course, last week we had the FOMC statement, and after that we saw gold jump by more than 1.6% over the week, and we've also seen gold break out to 6-month highs to 1,266 US dollars per ounce, boosted by the dollar, which broke down to 1-month lows. We've also seen US equities and overall global stock markets, they've continued to slide over the last few days here, and we have seen gold especially get the safe haven bid after the US Federal Reserve raised concerns about slowing global growth. And with that, we have also seen hedge funds and money managers yet again this week. They've raised their net long positions in COMEX gold. It's also worth noting that oil prices last week, they've now fallen to their lowest level since the third quarter of 2017. They moved down over 11%. Over the last week, they broke down to 45 US dollars per barrel on global oversupply, and hedge funds and money managers, they've cut their positions in US crude oil to the lowest level since August of 2016. So really the main focus as we go into the next couple of weeks into January, of course, is going to be the metals, especially gold, but also looking at silver and platinum for this period as well, this seasonal period. So with that, I'll move over to the charts and I'll show you exactly what we're looking at as we go into next week. So what we saw last week was a very shallow retracement on gold. We created this bull flag formation, broke above the highs here from Friday. That gave us our buy signal into the close on Monday, where we had our first signal to go long here on gold. So yet again, the same as last year, we got the signal to get into gold ahead of the FOMC statement on Wednesday, executed our first position there. We saw that run up in the anticipation of the FOMC statement, a slight pullback initially after the statement, but then we really got going again, as you would expect. After the monetary policy stance raised concerns about slowing global growth, we really started to see gold build up momentum on the Thursday here, broke out to 1,266 US dollars per ounce, closed above the 200-day moving average here as well. We've seen a bit of a pullback here on Friday. That's very common actually to see that pullback on the Friday after the FOMC statement. We might see the potential to retrace ever so slightly lower here at the beginning of next week if we do get a bit more follow through from that inside candle. I'd look at support certainly around the 200 MA, which at the moment resides around 1252 to 1253. You've then got that previous level of resistance which could turn support at 1250, and the ATMA. It's unlikely we'll get much below that, but if we were to pull back to that, the next major levels would be 1240 around the monthly pivot, and below that 1235 if we were to see any acceleration to the downside here. But I think it's more likely we'll have shallow pullbacks and then we'll bounce off that ATMA 200-day moving average zone and then start to make a rotation higher back towards 1266. And of course, if we break above 1266, then what you want to have a look at is the weekly chart, and that's where we can really start to get going here over the next couple of weeks and into January as well. On the weekly chart, well worth just noting the price action that we do see over this time of year. So if you have a look at the end of December of 2015, we broke out to the upside pullback, and then we really got going over the next 4 weeks, consecutive higher highs, higher lows, and higher closes. Of course, a lot of the move happens in January as well. Then going back to January of 2017, you see on the weekly where we broke out, really built up momentum, 4 weeks of consecutive gains, 1 week of pullback, and then another 4 weeks of upside. And then going back to January of 2018 here, you can see here where we started to break out on the weekly. Then we had over 4 weeks consecutive upside as well on the weekly. Very shallow pullbacks actually at the beginning of 2018, and where we're poised at the moment, broken above that neckline, found support at 1235. Very shallow retracement this week on the weekly chart, and we springboarded higher, broken above 6-month highs. You can see where the neckline resides here. So if we break above 1266, we should then be on track for a move back towards approximately 1275, then 1285, and then back just below 1300s there would be the next major layer of resistance. And of course, if we break above 1300s, we've got the potential to really start building up more momentum to the upside. So keep focused on the weekly chart there for gold. Hedge funds and money managers, they've increased their net long positions again. Gold is definitely getting the safe haven bid. Global equities have continued to look really weak here too as we go into the next couple of weeks towards the end of December. There's really no Santa rally at the moment on US equities, which is normally what you see at this time of year. Then just moving over to silver as well. I think silver is best really viewed again on the weekly chart here. If you look at silver on the weekly, it is consolidating. It's not moving as well as gold. So within the gold to silver ratio, gold is outperforming silver at the moment. If you look at the weekly charts here, it's gold which is really building up momentum, breaking above the 6-month highs. Silver's had a couple of attempts to break above the 1-month highs, but once we break above $14.90 to $15, we're very likely then to shoot back towards a 200 MA and about the 1560 zone as well for silver. We could certainly potentially see that as we go into January, which does tend to move quite exceptionally well for silver. And you can see we're looking really similar to what we saw back in 2016, even with the price action and where we are at the moment. Once it broke above the $15 level, it got going from that zone. It hit about the $15.60 level, pulled back and consolidated, but really got going here later on the weekly, where we then broke out above the $17 level, in fact just below the $18 level. So I would monitor silver on the weekly chart here for the potential for that breakout. Once we can break above the weekly, that's where we could see momentum pick up to the upside. But gold is leading at the moment, so gold we have 2 positions on. And then finally, just to touch on crude oil as well. Crude oil has essentially had this move that we were looking at previously, where if oil was to break and close below $50 per barrel and it took out that major level of support, oil really tends to move well within these $5 ranges. So if you break, for example, below $50 per barrel, close below that, it will keep following through all the way back down to 45. But you can see here with oil, it's reached all the way down towards the monthly pivot, and it's just continued to follow through until it's hit that key psychological level of support at $45 per barrel. Note again, hedge funds and money managers, they've cut their bullish positions on US crude oil to the lowest level since August 2016. So we're not really seeing any signs of a bottom in the market yet. We need to see really a shift in their positioning until we can start to then suggest that a low might be in. It continues to consolidate and then gain weakness until it breaks down again. That's what we've seen of late here. It might be that we do springboard off 45, or if we consolidate and break below that, the next major level is 42, and then below that psychological support at 40. But we're not seeing any strong buying come in here at all for oil at the moment. It continues to look quite vulnerable, which is different to last year, because last year around this time of year, oil really got going. It started to break out, and in fact, it lent to a 900-point move into January. It had a very significant rebound in price. It really does need to break above all of this downward trending channel. Very much a basic point, but it is just worth being aware of if you are looking at potential lows here to form on oil. Just put the 21 MA on the chart here, and basically you don't want to be getting long on oil, in my opinion, at the moment, until we break and close above that. From a seasonal point of view, we have what is known as the February effect on oil, and we've seen this in previous years. And I'll see if I can highlight it for you, where we saw that low which got put in around $27 per barrel. This was the point here, and this is where we put in the low. Then from February, of course, it really got going to the upside there, and you can see here, once we actually got going over February, you had over 1,000-point move to the upside. So we'll watch out for that as we go into February. But at the moment, of course, the main focus, gold for sure. We're looking for this seasonal play now. If you want to be kept updated real time with the exact trades that we are taking alongside our trade management, access to our exclusive webinars, we will be conducting another exclusive webinar next week for all of our private members. If you want to find out more, very simply, all you need to do is the following. If you want to become a private member of our live trading room program, you get access to exclusive live trading room webinars, real-time trade alerts delivered via WhatsApp, email and SMS, trading research and market insights, private members academy website, and also support and access to mentoring as well. So if you would like to find out more information about the program, all you need to do is go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you also subscribe to our YouTube channel. That way you're kept updated with all of the latest commodity reports.